Hey, what's going on, everybody? Chris here. Just wanted to do a more deep dive. I just thought when I did the quick analysis on oil, I thought, man, I didn't really follow the process. I really skipped over it. I followed the process for the S&P 500, but not for oil. And the title is about oil. But if we were to do more in-depth version of it, we're gonna go take a look at the just the process, and we don't need to go through most of it. We just need to go through mostly the timing solutions. That was, and then also looking at the macro chart. So we need to, of course, we have all these, but the dollar doesn't really affect the oil market as much. There's not a big correlation. And then the COT report, as far as the one on that website, it doesn't really show. And as far as like this commodity and how it behaves in relation to the bond market, there's not like a big correlation. So the biggest thing is like an event, a black swan event, and I don't know. It just seems like the more I watch the government try to create a plan, the more I just believe like I'm bullish on oil. That the actions taken is not quick enough. It's not quick enough, and I think the adoption is not quick enough, and I think it's going to be some kind of panic. I mean, they've already tapped into emergency reserves. By definition, I think that's a panic. So, and the price looks really good. The euphoria, the blow off top, happened, and I think it's getting ready to pick up again. And I'll kind of explain why. Mostly it's because of we didn't touch that quarterly pivot, and I don't think that's the end of it. That sell off, I don't think that's the end of it. And we're going to look at the cycles and timing solution just to really kind of pick some areas that might be good longs, and then we're just going to see what sticks. We're going to try and build a position, and then if anything, it's financing for the big position, and then we'll kind of just go over that. But now we have to just do some analysis on the price. So we're just going to first look at the timing solutions, and then we'll draw on it. But it looks like we might get some kind of closure on a bottom around 322. So it looks like that's kind of what's in line. It looks like all of it is downsloping, so we don't want to get ahead of ourselves, but it looks like maybe we'll stagger a little more, but we kind of want to watch. I know the market structure break had an H4 market structure break, but in terms of who knows what can happen, we don't want to really get ahead of ourselves. If there's further downside, we don't want to jump in, and it did look like it didn't retest really on that H4 breaker, so we want to wait for a retest. And if this is telling us to wait, we're going to wait. But in terms of the ones that look like it's kind of taken off, it looks like it would take off maybe around July, or the annual and the 4 year are correct, and this convex point is where it takes off, and then we hit these bumps in the road. But as far as the annual, it says it would peak in July. So that's maybe kind of inverted with the market, because in the market it's saying that it troughs. It hits the bottom in July for the S&P 500. So I don't know what has to happen, but it seems like we have to kind of walk through the dark a little bit. We got some kind of pointers, which is this consensus date right here. So we got some kind of pointers, but I think that's it. We just got to kind of feel out these dates and then see if a position can be built. And that's kind of just how I approach it, because this doesn't tell you literally how it's going to go. It just says, okay, there's an agreement here. We want to look for we look for the literal in the price and the market structure break. Yes, the H4 had a market structure break, but we have to wait for the retest, and this is enough reason to wait, because it's only 5 days away. So, but if it reclaims, might as well. But it's saying to wait for a couple more days, and then we pick it up. Because the annual and the 4-year just looks like it's really nice. It's like a really nice pickup. According to the decennial and the decimal, it doesn't look so nice. It looks like it's on its way down. But we won't be able to figure it out until that date, and if the market structure does the specified move we want it to do to confirm for beginning a position. But this is like the beginnings of wanting to build a position. Now we have to kind of like smith out, just like validate to see what's possible. I think as far as like ranges, we got the quarterly here. Let's look at oil. Let's take a look at it. Okay. So we got it on the quarterly, and it looks like it's at resistance right now. So we could the choices are we wait until the quarterly closes, or we can wait till 322. That's kind of just the choices we got, and then we drew on the 2-year range. I think, yep, that looks like a 2-year range, and then we drew on the 52-week range on this one. So we're just kind of taking a look as far as like the moving averages. As far as I believe, it's all above all moving averages. And then if we were to do kind of a drill down on range, I think it's, we'll take a look on the drill down on the range. So as far as the way it looks, this is looks like a really good representation of just the current price. It's at support, and that's a really good fib that's drawn in. On the daily, we reclaimed the 24, it looks like, and the bottom of this moving average channel, and then we drill down to the 8-hour. It looks like, okay, this is the channel in which it can flag in, and then we go down the 4-hour. It looks like we broke resistance there. What I'm really looking for is maybe a lower high, and then maybe comes in here and then back down again, and then that's maybe when we'll hit 322. So that's kind of what we're looking for. We're looking for it to come back. If we're looking for the H4, we're kind of looking for maybe market imbalances that haven't. So we want to kind of look and see if there's any market imbalance that was left untouched when it pumped. So take a look. So nothing on the naked pivots. It looks like we got a daily naked pivot open. Oh, it tested it. No, I don't think it's naked. I think it's been tested. I don't know. It's a little. I don't know, maybe it is naked pivot, but the best way, it seems like, we want the range to be on. So I don't know why I turned off the range here. We kind of want to turn off the order blocks but keep the range on. I don't know why the order blocks are on. Inputs, we want range only. Plot range. Boom. There we go. There's the range. And I think it's already applied. I don't know what's the one down here doing. So let's go ahead. Okay. So we got a range applied on the H4. I'll take it. Okay. So it looks like it could have another low into the 1.13. So maybe that's the bottom in 122. It's kind of what we got to wait for. It looks like it's coming into a fake out zone. It either will reclaim it to the upside or it'll get rejected. So we're just going to wait until there's more of a confirmation of just how the pattern is going to turn out. It does look like we have kind of a guide right here, and then we also have the flag version. So this one's more of like a symmetrical triangle. So then we're going to use this as like our judgment for when it breaks out. If it breaks out, we know when it breaks out. It's when this is no longer respecting the rules here. But we want to buy at the lows, and it looks like uh, it's escaping from us a little bit. But a reclaim of the 0.618 would be beginning of the buying to push us up to the upper end. But we'll see how far it gets. We might hit like the 0.5 or more the 0.382 and get rejected down low, and we'll see if this low holds, or if it's like 322, and then a break in market structure. But that's a good first start right there. So that range that we just drew in, and then this one I think is like the all-purpose range right here, and it looks like it's in the rejection zone. It's called like a fake out fib. So like this fib is supposed to be pretty universal, to where wherever it is, it's just the same thing repeating over and over, and it's near the fake out zone. So I would just be careful and wait until maybe this flag is filled in a little more. Let's see. I want this one on the 12 hour because that's when the range will actually pop in. So this one's got the range going, but it's not showing on the H12. Double check. So we'll go ahead and stick with the 4 hour range, and we'll double check on the 8 hour if it's got a range going. Okay, so it's not detecting a range, so we're gonna just go with the H4. And then as far as like a macro thing, I think so we're right at that breakout zone. So we kind of wanted to maybe do a double bottom here. Maybe it's like this is part of the symmetrical triangle and it needs to double bottom down here before getting really bullish. So one thing we're going to look out for is maybe something like this, where we hit here and we do a W, or like a double bottom. And then this is, of course, like a really broad stroke of what it's going to look like. And then that fib we drew in, maybe this is the 0.382. It'll kind of go like this. And then looks something very like that, like a double bottom bull flag. That's kind of what we're looking for. But as far as like what we're going to take from this H8 is this flag, and also this bottom with the symmetrical triangle that it's putting in, and just really recognize it. So this one looks like it's more forgiveness for either or the bull flag or the symmetrical triangle. It's not really, doesn't really have any bias, or it's very dispassionate. So this is, I think, the one we'll go with, and then we'll have it sync. We're going to have it sync to the rest. So we're looking for buying at support, which is either on this level or this level, and whatever market structure breaks to the upside, that's what we'll buy. And then we'll just scale in. So we're kind of lucky that we let that get away, because now we actually have a plan. So now I'm just going to take out the lines from the H4 and then just have it be universal of what we're looking for. So we're just going to take this out, and we're going to take this out. We're going to leave that fib there, though, just because it works. Maybe for now we'll just sync it to everything, even though that works. Okay, and then we want to sync these lines to everything. Sync. And then we might as well do the middle line, maybe. So that just means we need a duplicate of this line. Clone. And then move it to the middle. Okay, and then we just make it more dashed. so then it's not as crowded. So that line is roughly at the 0.5. Let's look, or the 0.618, or I guess in between the two, but it's right where the Fibonacci fakeout zone is. So I kind of, maybe let's take it away. Let's take it away. Let's just keep it on the 1, because it looks like this all-purpose fib is working out really well with the trend lines here. So we're looking for some kind of rejection at the Fibonacci fakeout, and then possibly buying on this trend line. And then we already got the dotted trend line in there, and then we'll go ahead and make the upward ascending channel, put it in there. Okay, and then this will be just our guide, all-purpose, going into this, because we already got the macro line. The macro line is this thick black line. The thing is, like, it's going to chop around it, and the quarterly close is where it's going to matter. But I think up until the month closes, it's going to be just consolidating, and we want to be ready when that happens. So we're going to put that there, and then we got the second one here, the middle one. We're going to put here. Boom. Boom. Okay. So we have the dates that we're looking for, which looks like it was March 22nd, roughly, I think, 5 days. Yeah, 5 days from now. We got our macro lines in. This big black line is resistance, and then we got our range in, the local range, and then we got some good trend lines going, and then we kind of know what we're looking for, and we want to buy at the lower end of the range. So it looks like we're kind of exiting the lower end of the range. We want another entry into the lower end of the range, and that's when we buy. We buy on the market structure break on the way up, and we start scaling in and moving up the break-even average on the way up. And we just keep on going, maybe get it 50% of the way. We hold until there's a breakout, and then that's when we start adding again. But as far as like the overall context, I kind of basically gave the most of it already. We have the range. We have the moving averages. We're above all the moving averages. You could use, I guess, the 10, but right now we're range bound. We're stuck in this kind of formation. It could be either a descending channel, like a flag, or it could be a symmetrical triangle, or it could be the ascending channel. But right now we're just kind of doing all of them as far as like a range. And then we also have the fib. And the idea is you buy low, and then you keep on scaling and moving up the break-even average as it goes higher. As long as the lows hold, we keep the position in. But we scale in slow, and we scale in only what's appropriate. If it comes back, we kind of trim it, breaking down the break-even average. But this is kind of what we want, what we're expecting. We want another low, if possible, and then a bull flag on top of that. But rarely does it ever happen the way we want it. But we are going to have this be our guide as like possibility of catching a low around 323, and then we're going to see if we can scale into the lows. We're going to see if we can scale into the lows and then catch a breakout. And then what our target for oil, so we're looking for the noise, and we're looking for this quarterly pivot. This is our target. We believe it's going to touch here, so we can profit the spread. So we can profit the spread just because we believe it's going to touch it, and that maybe be the blow off top. It could go probably beyond it, but I'm going to do some kind of random controlled risk management strategy. Take 2/3 profit, push 1/3 long. Like at least I'll have majority of the position profited once it reaches the other end. So that's kind of just the strategy. We're going to look for some more naked pivots if there's any. So going to the monthly and then the weekly. So the monthly's got a naked pivot. As far as I know, it hasn't touched it. So it means like it's highly likely it's going to touch it if the conditions and context are correct. And then go on the weekly. See if there's another one. Nope. For the most part, there's no more. There's a naked pivot all the way down here. So that's kind of interesting. Maybe we do a double top or a blow off top from there. So that's one theory. And then it looks like we have a naked pivot there on the daily. At the top of the symmetrical triangle or flag. We don't know what it is. And I think that's it. And as far as like daily naked pivots to the downside, do we have any? I don't think so. So, but as far as like that, we have maybe a possible one on the upside. We have a naked monthly on the upside. As far as like a weekly, it looks like we have a naked pivot on the weekly. I think that's naked or untested. I can't tell, but that's a possibility. You know, it could be a target that we could target to the short side. Maybe after we hit the blow off top at the tip top. And then this one on the daily, let's check out the low. Is that untested? No, it's tested. I say that's tested. It's been chopped around. So it looks like it's pretty simple as far as I know. And right now, we're just kind of respecting this this big range we got. And these trend lines. And with the current climate of like demand being inflated because of policy and just supply chain constraints and world conflict, it seems highly probable that it can reach that high. It's just the hype needed to be squashed, and it finally got squashed. But it's just the start of a consolidation. But people will believe that it's totally over. But I think this consolidation is an opportunity, and that quarterly close is an opportunity. Once we see the quarterly close, we'll have confirmation whether it's going to be bullish or not. But we're going to do this smart. We're going to scale in it. We're going to buy low. And we're going to sell high. And that means we got to figure out the range of what's possible. And we already charted it. We put it in right here on the H4. We see that what's possible is these lows all the way to 86 or near the monthly open. So what's possible is near the monthly open or 86 on the West Texas oil. And then of course the highs of the recent high. But we want to buy as low as possible, and we're going to use our market structure break. So less talking and less showing the chart, more showing the chart. So it's obviously breaking away, and I was expecting some kind of retest, and I think maybe we will get the retest somewhere once it closes one of these market imbalances, and it will come in, and then maybe it will come Friday, and then we'll buy up any extension to the low side, and we'll buy any resumption, and that will be the beginning of our position accumulation. Anything near the last week low or underneath it will be really good for buying. It does look like this pink line is like the reclaim, but we want it to go near the lows and the lower part of the lows, and we're going to see what kind of market structure breaks we get on the way up. But yeah, I'll be looking at I'll be going a little more aggressive and using the 15-minute as it goes down into these extensions. Maybe we just hit the 100%, or maybe we hit the 125%. But if we start to reverse and we start to break the 15-minute market structure break, I'll be scaling in. You betcha. I'll be scaling in a position to target that high. And the high, there's crazy predictions people are making. We're just going to use the price that's already there, and the target the price is giving me on the quarterly, 139.74. So we're going to take 2/3 profit there, push the remaining 1/3 break even long, and maybe it reaches $300, and then that's when we'll take profit. But we're the main purpose of that 1/3 is to just to allow randomness to let it walk, let a random walk happen, and maybe we get blessed. But we're going to have a trailing stop, and most likely it's going to be maybe a daily trailing stop, 9-period, 2.9 ATR. But that's pretty much it for just my analysis. I would like to see some overextension on the efficiency ratio for a rejection, just for good conscience that it got oversold and then it got bought up. And right now it's gray, so it's just saying it's choppy. So because of that signal, I'm not going to go in hard. And that means having small position size. And then also the timing solution is basically saying the same thing. It's saying, hey, the low or the best time to buy is not right yet. And I believe it. According to this efficiency ratio, just not enough volatility happened. And we need some disbelief to happen, a lot of sellers to kick in, and then make it oversold. And then once it becomes oversold, and maybe that it just returns back here, but and it doesn't go back, we'll just on the resumption up, we'll just begin small size position, and that's something that we won't regret. Because of the noise. The noise is just too high. It is consolidating, but I would like maybe, if possible, for it to possibly take out that low. If it could take out that low and that becoming the swing low, that would be great. If we maybe got to the 0.618 or wherever that, where's that fib? It's right here. What is that, 86? If we could go to 86, let's paint it in. Let's paint it in right here. It's looks like the sweet spot in the 52-week range high. Put in 86. It's right at the 0.618. So if we can get it to go into so with this 52-week range fib, if we can have it take out that low and then possibly go into this zone right where the 0.618 level is, hitting 88 or something, and reclaim this low, that would be the best setup ever. That would be the best thing ever. I would love it, just because this kind of move would protect this bottom, and then we would just scale in really slow all the way up, and it would basically be protected down here. This first position, it would be just basically cake, and we could even just hold this position, wait till the quarterly close, and then scale in some more. That would be a better kind of well thought out plan, in my opinion, to be not so aggressive, but at least be methodical. But that's kind of what I'm leaning towards as far as a good plan is first that date on timing solutions, 2, seeing if it can get overextended, especially down into the 0.618, and then reclaim the 0.5, and then maybe a small entry here or there on the reclaim, and then see if it breaks out and scale in pretty hard for the financing for that target. So that's kind of just the idea and the trade and just how I would approach it. If you liked it, great, and hopefully maybe it works out just as well as I said it's going to play out. Of course, this is all a plan, and it's not necessarily ideal, and it's not necessarily going to be what's happened. It's just plans that I put in place if it were to happen, and there's no guarantee. Of course, every time I take a trade, I have no idea if it's going to work out, but I try to do my homework to see if it's going to behave a certain way, and then it's all probabilistic from there. It just there's a chance, and you just kind of wait and see, and then you just kind of inch your way, and then you just build a confidence. But that's kind of just how what I would say on that.